Hey guys, and welcome back to the AstroFX YouTube channel, Technical Tuesday, episode 55. It's been one whole year since we did our last Technical Tuesday, and I hope you guys enjoy this very special episode.
Yeah, 1 year. I can't actually believe that myself. However, as we're all in quarantine right now, chart game being elevated in the last week. I sat down with Nat and we said to each other, let's do a Technical Tuesdays. Why? Because these market conditions are a great learning experience and a new school to actually open, broaden and learn more about the markets and adapt to the markets in these times. So Nat's going to go through some fundamental information. I've sat there and done 30 minutes of recording for you guys. And it's a great time whilst we're at home on the computers to learn, study and grow more in the markets.
So I'm going to show you guys the timeline of the impacts on the world and the impacts on the financial markets. Shaun will give you some technical breakdowns. Hope you guys enjoy this episode. Welcome back to Technical Tuesdays. Hey guys, so in the next few minutes, I'm going to hopefully explain to you guys a bit of a timeline of what's happened globally along with the financial repercussions of those events. So let's start straight from September to December. So this was originally in Wuhan, China, where the virus actually began. It was a bat mixed with an animal. There's actually a wet market. And over there, normally it's quite rare for the virus to travel from animals over to humans. Last time it happened, that was SARS, that killed around about 800 people. And however, this is where the virus is known to begin. Now, if we fast forward to January this year, this is where January the 1st, we had a first known patient over in China. And from there, it really started to escalate pretty quickly. On the 8th and 12th of January, we had several cases. And this is the first time media in China really started to call this a virus outbreak. On the 17th to the 22nd of January, we had 17 deaths and 500 people infected. Now, financially, markets-wise, the 23rd, the Shanghai Comp had a sell-off. For those that do not know what Shanghai Comp is, that's their version of the FTSE 100. So that's when it began to sell off. 27th, 106 deaths. So again, quite a rapid pace. And then 31st of January, we had the first case in Russia, Sweden, Spain, UK, here in the UK as well. February this year, on the 1st, the death toll jumped to 259 people, with 11,000 infected. A few days later, a week later, on the 11th, we gave this thing a name, the virus from the coronavirus to COVID-19, 19 from the year that it was born. On the 15th, we had more than 1,500 deaths. So again, I don't know about you guys personally that have been watching this whole craziness unfold. For me, when it pretty much doubled the death toll of SARS in such a short space of time is when this thing really started to get a lot serious for me personally. On the 21st of February, we saw many of the financial markets completely crash. Some of them being S&P 500 sold off, till date 28% down. Dow Jones, massive sell-off, which Shaun will explain in his video. American Airlines melts, currently down 54%. I'm going to go into that in much more detail in a quick minute. The Nikkei, which is basically the Japanese index, down 25%. So this is again where a lot of the madness actually happened with the global market crash. On the 26th of February, 2,800 deaths. Fast forward to this month, March the 3rd in Italy, 77 deaths. And so this is where obviously Italy started to become pretty much one of the worst places for this virus, unfortunately. On the 7th of March, total deaths, 3,500, with over 100,000 infected worldwide in over 90 countries. On the 10th of March, this is where we saw the pound have a huge sell-off. So for anybody that doesn't know much about Forex, or even if you do, the Brexit lows were 1.19. And now this actually made more lows than the actual Brexit at 1.14, still currently around 1.17 as we speak. Gold sold off and dollar becomes king. So dollar is the world's default currency. So obviously it's pretty much a safe haven. So this is where the US dollar went up, the US dollar index went up, and the pound actually got crushed along with quite a few other pairs. On the 20th of March, 10,000 people dead, with 21st of February, here in Europe becoming the epicenter of this virus. So I was just chatting to Ned a little while ago, and I told him to give me the current death toll, because I had it from the 20th Right now it's the 24th. Today we're at 400,000 people infected with 17,000 deaths. I'm sorry, from 10,000 to 17,000 in a short few days is very, very scary. And I do hope that all of you guys are being safe and yeah, definitely take care of yourselves, guys. So on here, I wrote some possible short to medium scenarios which might unfold. Number one, markets get shut down. Again, with this crazy volatility, the markets could get shut down, which will make gold rise and there'll be nothing else to trade as a possible scenario. Number two, further towns and cities close down. Stocks will then sell off further because there is no business, no shops, nothing going on. Possible number three, quarantine actually works, social distancing works. We slow the virus down, could be a positive point for the stock market. And lastly, if only essential companies and businesses remain open over the next few weeks, I can definitely see some choppy market movements continuing. So on the next board, which I'm actually explaining to you guys, is many of you might be thinking, how is this going to affect your pocket personally? And I want to show you that right now. So to put stuff in perspective, in the last 52 days or so, the markets have seen a $16 trillion get vaporized out the market, a global economy crash. And I thought I'd choose one of the many industries which are affected right now to show you the impact that it's actually have on all businesses, including yourself. So let's just choose the car motive industry, the car industry. So if the car companies see a drop in sales, so far China, where this virus actually began, has seen an 80% decline in sales. As you can imagine, the rest of the world will soon follow, very, very soon. So that will then lead to a decline in sales for the suppliers of the car companies. Therefore, so will the raw industries like metal, etc., that actually supply the car industry. That will lead to the effect of all companies even slightly connected to the car industry whatsoever. Now, if that all declines, guess what's going to happen? Layoffs, people told they haven't got a job anymore, companies going bankrupt. That will lead to a higher unemployment, and that being a huge market stimulus is going to be a huge problem for us. That will then lead to less purchases being made by people. If you're unemployed, being laid off, you're not going to spend much money. And of course, that's going to impact all businesses. Your spending is going to impact all of this to see what actually happens in the global economy. So that's how one of the industries out of many will actually impact you. So China is actually the world's global supply chain. Of course, 1/3 of products are actually made there, and 51% of metal consumption is actually made from China. Now, I've seen a few different scenarios happening. If we decide to try and make China not the global supply chain, and we try and distribute that, the whole world growth will slow down. The whole world's growth will slow down. So I don't know if that's going to happen, but it's going to be interesting to see what actually happens out of this. And then the Fed. So just a few days ago, the Fed has pumping 1.2 trillion, which I, to be honest, think is a last resort, into Wall Street and banks to try and save this economy collapse. And also, with your tax money, it's going to potentially very soon bail out many of the companies, American Airlines being one of them. So obviously with your tax money, I think this is quite vital for companies like American Airlines to be bailed out to, again, help the overall economy. To conclude, there's been many market crashes before, but I don't think we've seen one like this, where the car industry, NBA, which I'm a huge fan of, football, which has completely shut down the UK, concerts, events, airlines, every single thing is being affected right now. Now here in the UK, we're currently going through a lockdown like many of the places across the world to actually try and prevent the virus spreading. And I know there's been many cautions being taken, like obviously money being paid for salaries, potential business loans. All of these things is to keep the economy afloat. Now where that will happen, I do not know personally. And the events I've just spoken about are up until now. But what would be really interesting is to see what happens in the next 2 weeks, 6 weeks and 12 weeks. But guys, be safe out there. Hopefully this guy's taught you a little bit about how just one of the industries will be affecting your pocket, but this is one of the first times everything's being affected. So I'll pass it through to Shaun and he can run through a bit more of the chart work with you to actually show you the moves on the charts. Thank you.
Hey guys, welcome to Technical Tuesdays. It has been a while, as it always is a while. Me and Nat were just, going through some of the chart work that we've done in the last week or so, and given some of the social media engagement, which brought forward in the last week or so with some of the intraday trading and just some other views on some of the currency pairs, gold, etc. That it was a good idea to put this video together. So some great information and statistics there from Nat himself. Now I'm going to go through some of the chart work. I'm not really too into fundamentals and all of the economic events and so on and so forth. I'm going to relate some factors to the chart. We're going to go into the dollar index, into gold, oil, briefly, and then I'm going to dive into Bitcoin, go through Bitcoin, and then I'm going to revert back to GBP AUD, which you can see on the screen right here, and just give some of the tips that I've been utilizing myself and some of the things that I've been working on within myself to sharpen my mind and sharpen the way I look at the charts and to adapt to this amazing time which we are now in. I was actually studying last week around 4 hours a day, just staring at the charts, looking at the setups, absorbing this new price behavior at this minute in time because it's extremely interesting. Now, I have been mentioning it on social media a good few times that a lot of people, with all of the fear and the terror and all of these, some of the main markets falling, which Nat explained, a lot of people are actually hesitant to jump into the market right now and press that trigger button, and also they're not really too confident on actually holding trades to desired take profit levels, or some of the things that they were using beforehand, technical and fundamentally, are getting distorted by all of the carnage that's going on right now in the world. And I'm here to say to you guys, when everybody falls back, it's good to actually just go a little bit harder. So last week I was studying for 4 hours a day at the charts. Normally when I'm trading, I will just go through daily routine. I would look at charts in the morning for maybe 1 or 2 hours, like on and off, not sat at the charts like I have been like the last week and this week, but I'll be up early and I'll be doing my daily things and trading around my daily things rather than being glued to the computer all day. But right now in this situation, I'm so eager to learn, and with all of the quarantine going on, it's a brilliant opportunity to just get in there and look at the multi-time frame analysis, look at some of the lower time frames like 3-minute time frames, 1 minute, 5-minute time frames. We're actually providing amazing opportunities, which are actually swing trades right now due to the amount that the markets are moving when it comes down to pips, etc. So lots of opportunity. Don't be fooled by what we see outside and listening to outside sources. Again, tunnel vision, stay aware, stay awake, stay in your zone, and stay hungry to actually learn more. And again, last week I was doing 4 hours a day. Yesterday I was sat at the laptop for 8 hours in total, communicating on social media, etc. We can all gather around the social media campfire right now, and you communicate with each other and share ideas and all of that kind of stuff. So I'm quite enjoying what's going on. So yeah, 8 hours a day yesterday. Today I had to get some sleep in, but I'm looking at I'm currently long on GBP AUD. Posted that on Instagram not too long ago. Had one stop out this morning, re-entered. I'm up at around 180 pips at the moment. I'll share that with you very soon. But yeah, these are the times in which we can actually learn more. Okay, so never stop learning. Number one, what we're going to go through quickly is if I just switch over to the dollar index right now. Now, dollar index, as you can see, March the 9th was more or less, give a day or two leeway, but state of emergency was then declared in the US. Okay, now at the same time, a few days earlier, the emergency rate cuts came through. Emergency rate cuts came through due to obviously the banking system, travel system, all of these systems that are more or less going down, and the demand is going to drop substantially because a lot of us are not actually allowed to travel, and all of this is just general information. But what I'm going through right here to show you the dollar index on a breakout, okay, the rebound started on the March the 9th. Now, if I just relate that quickly, we're not too interested in the dollar right now. It's a risk-off scenario. So USD is going up. A lot of money came into the US dollar. Obviously, the counterpart currencies have been dropping in value. GBP USD, as Nat mentioned, is at mad all-time lows. We have gold at this time. So if I just switch over the chart right now, look at March the 9th. Okay, now last November I was expecting a huge bull run on gold. Now if I just go back through that once again, before I go to this here. What I actually seen, what was seen, back then we had this run right here. So you can see this bearish candle on the 4th of November, the weekly closure right there. What actually happened is we plummeted and we stabbed more or less into a previous wick area, very, very simple area of support. If I just quickly, all this will make sense in a moment, but we came into the wick region right there. And that price stab, okay, let me just line this up so it's actually horizontal. That price stab fooled many people at that point in time. What we actually did, we consolidated on that area for a good few weeks, and then we started to gain further strength and momentum and lift off to the upside. Now, a lot of people were thinking that gold was actually going to drop down into the next area of like 1380, 1400. But I viewed this and I knew that in 2020, there could be a lot of public demise upset, economic upset, market upset because of simple market cycles, which I've talked about before in previous Technical Tuesday videos. And also many of the markets needed to retrace, but at the same time, the way the economy is going and quantitative easing, and there's only so much the banks can print and push money into the economy, because again, as Nat mentioned, that the value of the dollar is going down completely because there's so much, it's more or less being oversaturated into the market. So at this point in time, due to what I was seeing correlated markets against gold, my viewpoint at that period was that bearish move was a false move, stabbing into the low of the wick, and we were actually going to rally up to break these highs here into 1600 and 1700, and I have all of this recorded. So if we go back into this daily time frame, we can see there on the 9th of March, right here, state of emergency, risk-off scenario, money was pumped into the US dollar. It collapsed gold collapsed directly off the psychological level of 1700. Now, what I can also see here, because these points and figures aren't going to make us any money when it comes down to trading intraday or trying to find swing trades overall, we have to look at the specifics and the market psychology that is printed in the chart. And what is this actually doing to the PA? And what is the instrument trying to achieve here? So if we look at the sell-off, came in at the 9th. If I now remove that, I can remove this as well. So this high, it was taken out, came into 1700. Okay, if I put the crosshair at 1700, you can see the two bodies of the green candle and the red candle, they closed right below. We have the spike into 1700. So that tells me also psychological levels are key points and key areas where money is pumped into the market and extracted. A lot of central banks and major institutions use these areas for take profit levels as well. And we can clearly see that gold spiked through it, but the bodies managed to close below. So early sign of a reversal over here as well. Breakout wise, people who are looking for potential breakout trades perhaps would have an eye on the previous high. So it's pushing people into the market the wrong way as well before the reversal has formed. So we have a nice correlation between the dollar index and gold right there too. What I started to mark on here, so I'm just going to keep flicking back and forth into this GBP AUD. I'm just currently monitoring some positions here as well. So far, so good. Are we good? Yes, we are fine. So what I started to mark on here as well was certain areas where those who were following the bull run, because it was still looking substantially bullish on the daily time frame and the weekly time frame, where are the main key point areas where major stops would be formed. Now, if we just look at this price run over here, this high was taken out at 1610, 1612. On this bull run, from the low, we went into 1550 into the highs of 1688. That's a lot of pips. That's over 1,300 pips. Now, price melted, price pulled back, and you can clearly see after this point was taken, this pullback right here, money has been extracted from the market. You can just tell by the volatility of the candle and the way the the way the market actually pulled back afterwards. But what I'm looking for right now is in this bull run where the high was taken, people were enticed to actually go long. Why this sudden push back to the downside? Was the dollar index to actually sweep people out of the market? Why? Because the next move I'm going to actually tell you about on gold, we're looking at gold now accelerating past and beyond 1700 into 1750 and 1800 due to the economic upset that's going on. Was the move on the 9th for the dollar index also a ploy to actually wipe a lot of traders out of the gold market before the real bull run is now going to commence? Maybe. So if we look at that, we have this area right now. So where will stops be placed on gold? Again, going into market psychology. Number one, below here, because anybody who wants to more or less, generally speaking, go into the false breakout right there, they're going to have stops just below here. So what did the market do? Snap straight through that. The next point of call for traders who were long on gold, we have this entire region right there as well, because that was the last pullback area before this bull run. So we have stop levels, stops being placed below here, and also stops being placed below here. Taken, okay? And that is quite frustrating, quite annoying at times when that does happen. We came all the way back into base lows over there, which stayed sharply above 1445, 1450. And then we have other minor areas, which we could just take this entire base point from right there. And once again, from these bullish pushes, we have stop area number 1 clearly on the chart, stop area number 2 clearly on the chart, and then stop area number 3 clearly on the chart. So that move on the dollar index right there, the money that was pushed into the dollar as a safe haven at that point, has allowed gold to break 3 major stop placement levels, okay? And these moves on gold were relatively huge as well for those who were in the market at that time. But that money that went into the US dollar has also manipulated the gold market to break those stop areas and them stop levels. Then on the other end of the spectrum, if we just quickly look at the daily, internet's a bit slow, come on. Looking at the daily over here as well, you can clearly see that sustaining above 1450, a lot of wick price action, a lot of noise down here as well. The weekly wasn't looking too good. The weekly closure was very indecisive. And then this week, the bull run has more or less, boom, came back into action, woke up, and gold is now on a rampage. So what I believe has happened there is a lot of people who are holding the longs on gold have been shaken out by the money that went into the US dollar on those 3 areas I've just mentioned. So simply looking now at this, there could have been people that were starting to short gold after all of the panic, and where would their stops be? Where would their safe precautionary areas be, or danger zones be? It's going to be above 1703. So we're currently trading at 1620 right now on gold, and what I'm expecting is the market to come up, take out 1703, potential retest there, or simple correction, and then we're going to be going into 1800. So my viewpoint with gold is 1800 per ounce. Okay. Another thing I can clearly see there is 3 drives to the upside, and then we have the collapse. That's a standard pattern we can see on any time frame. But now, market psychology wise, against the USD, I don't really know what's going to happen here. Again, on the 17th, the points went from 0.5 and they were cut down to 0. So who knows what's going to happen? And with that being said, it's another potential for gold to skyrocket into the roof, because this more or less isn't going to last too long. There's never been a point in history really where everything has just shut off and gone down. So we could be in for some very, very interesting price action on gold, but that is my viewpoint there. So let's see how that plays out. Going from gold, I've had a mad day, I've got some notes here. Okay, we've done that. Oil quickly, the price war started, and again on the 8th of March, the 8th is there. On the 8th, on the Sunday open, oil tanked. Price war was started between Saudi, Russia, and what they're looking to do now is put more supply into the economy. So with that being said, looking at oil right now, with that move, again, never say never, currently hovering at 23 23.46. I'm not really a big fan of oil. I'm not really into it. A lot of people say I trade oil, I trade this, I trade that, but I don't really know too many consistent oil traders, to tell you the truth. So it's never really been a favorite of mine or something I've dabbled in for too long. What I'm looking at here on oil, simply put, okay, as it's falling off the face of the earth, because they're putting more supply out there into the economy, I feel that due to this slump, oil is going to take a hit on the price because the supply is going up, but the demand isn't necessarily going up because of, just look outside. So with that being said, simply put, if you look back at, on the chart here, oil, $10. Looking at oil hitting $10, and then when things do pick up, hopefully they do pick up very, very soon, oil price will then start to increase because the demand and people are hopefully getting back to the normal business. So oil there, $10 on oil, I'm looking at that. So we have 1,800 on gold, $10 on oil before the rebound. After that, guys, I want to go into Bitcoin as well. So BTC, I made a pretty bold prediction back in November. I put it on my Twitter account. I actually deleted everything off my Twitter account and just put that there. I'm a bit of a wind-up merchant out here on the internet as well. You know, people get really, really, really pissy and offended if there's a simple chart or trade prediction that doesn't go, you know, with what they think in their head, and they can really, you know, throw their dummy out of the pram. But yeah, anyway, BTC. So I follow cryptos, okay, for like 8 years now. BTC, I started looking at it when it was around $180 to $250. I wrote a full-blown BTC article slash, you know, everything that I researched more or less, why the price will go up over time. Price targets at that point, I had 8,000, 14,000, 18,000, all of them were achieved. The next ones were 32,000, I think it was 82,000, and then from there, I can't remember. But anyway, I put that out there. I think that was on Cryptonary, and people actually have that Bitcoin document from me. From there onwards, Ethereum, I was starting to look at Ethereum at $6. I predicted 450 for that. Obviously, it went way higher. And then after that, it was XRP at 19 cents, and with a target of 2.5. All of them came through. So they were like my main calls, and that was over the last like 3 years. Now, as time went by, because again, I'm consistently looking at the economic state and the manipulation that's played out in the world, in the markets and media, and just human psychology in general, I'm always open to learning more and more and more. And applying what I've learned over the last 2 years or so, and just simple psychology on BTC. So for instance, when BTC was trading at like the 1800 area, okay, and 1900s, the media suddenly just came out of nowhere and started to really blow smoke up Bitcoin's ass and go into fine details about why you should invest, this, that, and put a load of hype into people's minds. Now, that was at the high, so imagine how many people at that time, at the height of the bubble, came in and started to invest more money into BTC. Then what happens? Oh, miraculously, BTC falls from the all-time highs and then makes lows just above $3,000. So people who were invested back then, they either took money out and panicked, or they're still holding BTC, and it's very, very easy now for people to just say, "Oh, what's your strategy for this fund?" Because a lot of institutions and funds are now just saying BTC hold and buy, etc. Like that's the fucking easiest strategy to even think of. It's not even like real. Like, there's no real workings behind why that should happen. But let's go into the charts and let's just take that what I've just mentioned there into consideration. Now, if the market is flushing people out left, right, and center, then there's two areas that we need to focus on this monthly chart right here. Number one, looking at the spikes and looking at the history, okay? Looking at this area where I've highlighted the green candle and I've brought this area right across on the monthly, and I've done the same over here as well, because this is more or less starting with this area. This is where the price was contained for quite some time before the breakout occurred on BTC, which was just here on the 1st of March 2017. Come on, GA. make my day. 1st of March 2017, so I just contained that small area right there. The top area is also, I've simply put the area on it and contained that too. But what we've seen was huge spikes, so money is being extracted from the market because money had to come in, a huge push of liquidity had to come into this market for it to break out and consistently rise to the upside from 1st of March 2017, breaking out of the high box area of around 1100 to 1250. So we went from A to B, and at B, where money was extracted from the market, whoever's pumped this money in, it could even be a crazy money laundering system because again, nobody really knows how BTC was created. It's a strong network, can't be hacked. All of these, I'm not like a super expert, but like who's made this? It's kind of something that's too good to be true. Who's really in control of this? Who's moving mass amounts of money through the market and through the world? And that's more or less what's happened here on the 1st of March. Because a move like that, I know the liquidity is quite thin and it's not much in comparison to the foreign exchange market, but you need a lot of money for this to more or less be pushed through. At the height of it, the media comes out and then says this is a good time to buy BTC. And where the money has been extracted, where we can see here on the two wicks, the media are trying to persuade people to jump into the market at those highs and crush more or less the middle class, because a lot of people I heard were doing stupid things to gamble money and take credit card loans out, etc., to go in to try to make money off this because of what they've seen on the media. And again, I can't really comprehend the general person's mentality because, but people are that stupid to go ahead and do that, but then they get crushed. So as money comes out, as the job, whoever's put that job in from A to B is now being extracted from the market. People are also getting slaughtered, so it's a two-way system, as is with what I've just explained on gold, as is with Forex. So we have to look at both sides of the fence. Anyway, what we've seen once more is the market, once it balanced above 3,000 over here on the 1st of November, it had one more push to the upside through 12,000 and into the highs right there. But where I've highlighted that box area in that region, we can see 1, 2, 3, 4, okay, 5 and then 6 wicks that have more or less come into that area. And again, there's an extraction of funds going on. So with everything going on right now, in November, my signal for this to collapse and take out this low right here into this band, it could go anywhere from 150 to 1170. I made the bold call of 150. And that was around here because we broke out of the box, retest 1, retest 2. Recently we had a third retest and then the market sank into a low of 3938. What we did back then in 1 week, in one weekly bar right here, I do believe I measured that. Yeah, that was it. There's only been, I believe, 1 or 2 down weeks that have been substantially larger than that. The first one was this one over here. And we have one that's neck and neck just here as well. So this is the 3rd week that's been substantially large when it comes down to the liquidity flowing into the downside and pushing this price lower. So all I'm waiting for more or less is the 1 weekly candle to more or less copy that, duplicate, replicate that into this area. Now this can happen. Never say never. This can happen. BTC can go into the band of 150, back into where I've showed you the original liquidity spot. BTC can jump straight back into that, and then maybe we can reevaluate this and maybe put out some calls to buy BTC over time. But again, it's untrustworthy overall. I've just explained what's been happening on the charts. I've explained the psychology of what the media have put out there. But again, you never know who's really operating this market and what their goal for it is, or what they've been using it for. And I have my points in my head from my own research, but I'm going to keep that to myself. So BTC, we can potentially come into that band. If we do, remember, I've got a lot of stick for that. But again, remember, a lot of these people who think they're BTC coin dealers now and crypto experts, they shouldn't even really be in these markets, believe me. And soon we're going to see, with all of this stuff going on, who really belongs in these markets, who can really ride the wave of these markets and have the balls to push through and survive some of the times that are actually coming. So again, everything will unfold naturally. The weak will get casted aside and the strong will always continue. So all the best, guys. And then lastly, come on GJ, show me some love. Lastly, I'm just going to show you my quick setup, which I've been focused on GBP AUD. Now let me just check this trade first. All right, so GA, I switched over to GBP AUD and I made it just one of my fine points of reference because I was looking at gold as well, but I wanted to come down into lower time frames and find more opportunities. This was before all of the madness actually came to the surface. So I set myself a task of looking at some of the smaller time frames. Like here I have the 3 minute tiled with a 15, then I have the 30 minute, and then I have the 6 hour. Looking at the 6 hour time frame, it gives me 4 times in the day to check the 4 candles that are produced in the day within 24 hours. And that more or less for me can display what the session has done. Okay, so it works really, really well for me. Obviously I look at the day at the end of the day as well, but the 4 hour, all I'm looking at here is I've got to a level now in my trading where I've condensed all of my knowledge into one currency. Really great movements, by the way, recently. Opportunity is everywhere, but I was fine-tuning this for 2 months beforehand, and since this outbreak and quarantine has started, some of you guys can vouch, and you know, you've seen some of my work on social media. I've had time beforehand to come through and really take advantage of what's going on and the volume that's being pushed into the market. So what I'll do more or less, I've got to an area of my trading development where intuition plays a major factor in my decision making. Now, because I've looked at GA for many years, but now as I've refined it and consistently every day, I'm just watching the market movements and I'm getting to know the pair more or less like the back of my hand. I'm not looking at 4 pairs, 5 pairs, trying to find like this trade, this kind of trade or that kind of trade, you know, swing trade or all of this kind of stuff. They're just labels. So I push all the labels aside, number one. What I'm looking for is a trade. You know, I could find a trade on a 3 minute time frame, which I did earlier on. And then after, you know, some successional closes, the 15 minute or the 30 minute combined may then show me, okay, this is going higher. So an intraday trade or whatever you want to label it can then be formulated into a swing trade or intra-week trade. Okay, so what you want to do, I got to the point now where I'm kind of flowing with everything. I feel that if we're drawing too much on the chart as well, the logical side of our brain is being activated more than the creative side where the intuition and the flow comes from, where you can just spot trades and the market more or less comes to you. I feel that it's blocked when we're using too much of this side of the brain where we're like checkbox, 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 checkbox. I have to look for these 4 or 5 things before I can enter a trade. You know, I've got to the stage now where as I'm scanning the market, my brain is processing all of the information and finding setups, you know, 3 minute, 15 minute, 30 minute. Is everything that I've programmed myself with in the last 8 years just clicking naturally? And that's what I'm seeing right now. Is the danger, if I feel danger and I see on various time frames, oh shit, reversal quickly there on the 3 minute, there's another reversal there on the 15, get out the trade. Am I actually reacting to danger rather than being stubborn and trying to hold the trade? I am reacting. Why? Because I know the next trade is always going to be around the corner as well. So I feel that some of the best discretionary trading comes from, you know, this multi-time frame analysis right here. It's not to say I'm only looking at one time frame. There could be a great setup on the 6 hour, okay? And it looks like shit on the 15 or the 5. It all comes down to experience, dedication, cleaning the charts up. I have a few moving averages here, different moving averages for different purposes. Looking at trends, looking at this, looking at that. But mainly I'm looking at the 3 time frames, 3, 15, 30, putting a few things together, which I've learned and I've been practicing myself over time. And again, it's just clicking for me. And some of the moves right now, we're looking at 100 pips in like 30 minutes. And on the losing side as well, you have to be very careful, but you have to be super pinpoint, super accurate in these market conditions because things are changing at the speed of light. And I don't think it's healthy and I don't think it's wise to consistently look at 3, 4 pairs And here now with GA, I do actually hope this continues. I know it's not going to continue forever, the amount in which the market is moving, but you know, it's a great school of learning. That is what it is right now. It's a new school of learning. So stay dedicated, stay persistent, and you have to adapt. If you're not adapting to the market and you're trying to use these boring ass other styles that may have yielded you a few % a month or whatnot, then it's not really going to work out too well in this market. So if you're smart, you have to adapt, you have to evolve or get off the field more or less right now. If you're looking at too many currency pairs and you're just getting slaughtered on a daily basis, bring that down and do not deviate. Do not deviate. So you might have a few good runs. Okay, let's say you did 4 trades on GA in 3 days. Then you say to yourself, oh, I'm really good at that. Let me just see what gold's doing. You may put a trade on gold, get slaughtered, kick yourself in the ass. Why did I deviate? So do not deviate. Stick to one thing, become a master at one thing. Come down a few time frames. I like 3 minute because it's a cross reference between the 1 and the 5. 15 minute, 30 minutes really good as well. And then the 6 hour, looking at weekly and looking at daily momentum, etc. But yeah, stay safe. I'm going to continue to give updates. I hope you enjoyed the video. Gold updates, oil updates, etc., etc. I'm going to lock off now, and yeah, I'll see you guys next time.
Hey guys, so I hope you enjoyed that very special episode of Technical Tuesdays. So one of the biggest excuses I always hear is people saying, I can't have time for trading, I'm always at work, oh, I only get a few hours at the end of the day. Right now, we're all trapped at home for 12 weeks minimum. Perfect time to actually get your head down, understand how the markets work, and get into trading.
That's right, as explained in my segment right there, I normally, well, last week when this epidemic started, due to the new market conditions, I sat 4 hours a day to learn these new market conditions, to adapt to them. And this week, yesterday alone, as I mentioned, I've done like 7-8 hours, and I'm continuously learning and learning and learning. So there's no excuses, you know, there's no excuses right now. It's a very exciting moment in the history of the markets as well, not just in the economy. So yeah, we're looking at doing a flash sale on AstroFX 2.0 online course, 25% off. Link will be below. And you know, wish you guys all the best, and we'll see in the next coming weeks. Due to market conditions and some of the targets may have been achieved, we may be dropping another Technical Tuesday as time goes by.
I was going to say, me and Shaun are planning on doing an Astro students webinar on Sunday, hopefully. We're going to take a bunch of this time to actually get people involved back into the markets. Again, guys, the glass is half empty or half full. You're either complaining about being home, or you take advantage of this time and invest in yourself. So astrofxaccelerator.com or astrofxc.com, the link's gonna be right here. Hopefully see you guys on the platform, and hopefully see you guys joining us in the near future. Thank you for watching the episode.
Thank you.